Hello traders, it's Samurai Trader here. Welcome to this training session. We may go over two videos. We'll just see how we go because I've got a lot of questions from members that I'll be covering in today's sessions. We're also going to be looking at some trading action from the ES 1000 volume, that is during the New York session, particularly looking at a couple of things that's set up on Easter Monday. And also looking at the Globex session for yesterday and today and some trades that I've taken just explain some of those trades, why I've taken them, and a couple of things that I've noticed, plus covering a lot of questions from members. Now please remember that it doesn't matter what market you trade, whether it be stocks, futures, or forex. These strategies work on all time frames and all markets. But let me just say this, that each market has its own personality. That is, you just need to allow to perhaps do some testing on which is the best time frame for you to actually trade. As an example, trading the 1000 volume during really heavy volume days is almost impossible on the ES. You need to jump to a 1500 or even a 2000. Personally, if I can't trade the 1000 volume, I'll just stand aside. I don't like jumping in a really fast moving market. You get too much slippage and you make mistakes, and you get pullbacks and retracements and all sorts of things. So I like to just sit it out. And what you generally will find, you might have a 10-15 minute spurt of really fast price action, then it'll slow down where it is tradable. So just keep that in mind, that where I put these time frames up in really fast moving markets, these may be too low. Likewise, in really slow markets, you may need to adjust the time frame depending on the market you're trading. So what we do have to put up with, of course, or put up I should say, is the understanding the risk disclaimer. If you're not already a member, if you're new or you're new to my channel, please have a read of the disclaimer. Now, everything I'm about to show you is covered in the Day Traders Fast Track program. If you haven't already subscribed to my channel, my YouTube channel, please do. Click on the bottom right hand corner, I think it is, and you'll be able to subscribe straight away. Likewise, if you don't have my free ebook, or you don't own my Day Traders Fast Track program, where for $197 you obtain the world's best day trading strategies, please visit my website, and you can do that by visiting my site, obviously down the bottom here on this page. So let's kick this session off though. Simplicity is the key to success. Not only with the strategies, let me get this out and say that again, not only with the strategies you trade, but the number of strategies you trade at any one time. One of the challenges is, traders, that in the Day Traders Fast Track program I teach now over 12 different strategies, and the reason being, you might have, say, a T20, which is a change in market direction, but then you'll have a T25 straight after that, or maybe a T1. So different strategies have a different place or a different use, or you use them at different times. With that being said, you only need to master really one or two high frequency trading strategies to make a fortune in the markets. So where I throw in these information sessions a lot at you, just focus on one or two, maybe three strategies, and you'll make a lot of money out of the markets. Really, the key to success, traders, in our business, besides simplicity, is patience and focus and discipline. If you do that, you'll make a great deal of money as a day trader or as a swing trader. So it really gets back to what I'm saying in this slide here. Traders, I talk I deal with clients one-on-one, members one-on-one, every week, where I act as a coach, and they pay me a very nice fee, and I'll coach them one-to-one. Normally it's over the internet, over Skype, and time and time again, with the experienced traders, they fail constantly because they've moved their stops, they've been chasing losses, but one of the biggest things is they've lacked focus. So this little statement here, this is from Tony Robbins, and look, loving him or hating, Tony Robbins has got some incredible material. And what he states here is, one reason so few of us achieved what we truly want is that we never direct our focus. We never concentrate our power. Most people dabble their way through life, never deciding to master anything in particular. And it's almost, when I read a lot of his material, or I watch his recordings or listen to his CDs, quite often I feel like he's talking to me, because it's just so applicable when it comes to traders. And a lot of this really comes back to, now, one of the most important lessons or things that you really need to learn. Most of you are aware that over 70% of my members, or traders that I deal with, well over 70%, putting aside the professional traders I work with and trading with and working with corporate, is 70% of traders that are experienced that have failed or are failing. Now the challenge is, and I talk about the damage, the psychological damage it is done to traders every day, because it's true. You go and blow your trading account 1, 2, or 3 times, it really damages your confidence. You become very skeptical on any information. And when you look at the chart, you're not thinking about the setup, you're remembering past experiences. And this is where I talk a lot about NLP, and really get some self-study on NLP yourself, because most of us, when we're trading, we don't think, we remember past experiences, and what it does, it clouds our judgment. But getting back to the point I want to make here, reframe your questions from "this won't work" or "no way" to "how can I use this? What's good about this? What can I learn from this? How can this improve what I'm currently doing?" By turning it around, I promise you'll have a massive turnaround in the way you feel about yourself and your trading overall. Now I know I cover a lot about this in the sessions on psychology in my program, but it comes up every single day, traders. The traders that email me, or the ones that I deal with in private coaching that are struggling. We really need to manage and watch our self-talk. Now let's start to talk very quickly, and we'll get into the trades in a moment and onto the charts. A couple of things here. This is an email I received from a member a couple of days ago. Well, Ray, I've completed doing the back testing on the 234 for the month of March 2016. Pretty impressive performance, but you knew that already, of course. So if you look at those figures there, if you go down and look at the Kelly ratio and the profit and loss per trade, the win-loss, and particularly the profit factor there of 3.63 overall, it's nothing short of outstanding. Now this is taking a maximum of 334 B's in a trend, and you'll hear me talk a lot about that, because what happens is, after a period of time, markets do become exhausted. Now traders, one of the best ways for you to develop your confidence, or to retrain and redevelop your confidence, is by keeping statistics on your trades. But just remember that statistics can be skewed, and when you look at something like this, sorry about that noise in the background, I just got a strategy alert on a trade. One of the things to keep in is to remember that some trades you can never enter. That is, say if it's a news announcement, or like there was a trade today which the market just took off within a matter of seconds, this is on the ES, flew up 10 ticks. There is no way known you could enter normally on that trade using most of our strategies, unless you had some sort of bracket trading. So just keep that in mind. So where we've got an 82% win-loss ratio here, a minimum of 1 to 1, it's outstanding. It really is. And allow 5% for mistakes or not being able to get into the trades, etc. But what you'll discover is with nearly all of these trades, they're high probability trades. So getting back to this and talking about developing your compelling future, traders, on a video last week I covered this, and this is something that I put together with a member that hired me for a couple of days. We spent a lot of time on this point. I want to say a lot of time, it was mainly on learning how to trade the strategies, but this is a realistic plan that I put in place. And it's amazing how the human mind can achieve incredible things when they have a compelling future or enough reasons for doing so. Now in this particular plan, what we're talking about here is starting off with a capital of $5,000, and that just brings something to mind. I had a session with a trader overseas a few days ago, and Paul, thank you for being very open with me. And with Paul, he wasn't sure and what commission he pays per trade. It's a simple thing. Now it works out to be that he has a spread, so during various hours the spread will widen. Traders, what we pay in commissions is very, very important, and that's one thing that I love about futures trading. Of course, it's under $5 round turn per contract you trade, $2.50 in, $2.50 out effectively. But the other thing we spoke to Paul about was risk reward, or particularly the risk and the amount of capital. Here with $5,000 starting capital, your futures brokers will tell you that you can get underway during the New York hours with say $700 or $800 the intraday margin. Well, of course, you have a loss of $75 being 6 ticks, and you've wiped out 10% of your capital. What is really important, traders, you never risk any more than 2%. And I know I'm talking to and I'm sort of covered this many times in nearly every video, because it's one of the most common mistakes I see. So in this particular plan, very quickly, 5,000 capital, earning $200 a day, which is basically what is that, 3 6-tick trades a day, and you're making 1,000 a week. Within 6 weeks you're up to trading 2 contracts, and by every time you accumulate 5,000, you then start trading another contract. Within week 25 you're earning $50,000 a week. You're trading then 62 contracts. You're earning a great deal of money. Now the reason this is not achievable for most traders is you've got to have a risk tolerance, of course, because you really, even though you're within or well under the 2% risk, you're actually, with our strategies, with a 6-tick stop on the ES on this plan, you're only risking around 1.5%. However, once you're starting to get up to around 50-60 contracts, most people get shaky on it, and that's fair enough. But the point here is to illustrate you may be comfortable getting up week 16 earning $10,000 a week, starting off with 5,000 capital, $200 a day. That is possible, and you're about to see it. I'm about to show you how on 2 very quick trades I was up $100 just before I recorded this video per contract. And I just want to show you this because, once again, if your future is compelling, you have enough reasons, you'll bend over backwards to get there. And back on this plan, and by the way, this spreadsheet for my members, this is in the Google upload, so you can go and get the spreadsheet and change this around if you wish. It's in my Google uploads, which all members have got a link to, so you can go and pull down this spreadsheet as well if you wish. So by week 34, on just compounding, that is, every time you earn 5,000, you leave that in and you go to another contract, within week 34 you're earning $89,000 a week. That is achievable, traders. There are traders out there doing it, only of the minority. Not a lot of traders do it because of a risk tolerance factor. They've got to hold on, they're not willing to risk that capital, and I can understand that. So all of this, of course, is covered in the course, but let's go and have a look at some charts, and I want to run through some questions from traders. Now, first of all, I want to just quickly talk about what we call in Australia Easter Monday. Now, I know in some countries around the world it's not a public holiday, but it's a big public holiday here, and if I remember correctly, we what do we have? I think there was only about 750,000 contracts traded, where normally we see on the ES, that is, and this is the ES 1000 you're looking at here, normally we'll see somewhere in the vicinity of 1.5 to 2 million contracts. However, even quiet days, do I spell the right? A quiet day can yield some great results. So very quickly, Jonathan asked me about T20s, so I just marked them up very quickly. So this is Jonathan, so you can coincide this with your chart. This is here 909 exchange time, and T20 winner, T20 winner. Okay, ignore those other little arrows, but you've got there a T20. Okay, once again on a 6-tick stop. That ticked against you because I remember that trade because I was in it. That went against me 5 ticks, and you were still right by 1 tick. And just remember, if you have an entry, traders, anymore, and my rule is 4 or 5 ticks out of the entry signal, I will wait for the T20-1, which is your first pullback, which was right there. Okay, so there for me it's still qualified because I was only 3 ticks out, so my 6-tick stop still put me down here, and that was still really nice for 8 ticks. Okay, so winner, another winner, and let's keep going along here. So what's that? 5 winners in a row so far. That was good for 4 ticks, 5 ticks actually. Let me just confirm that was actually there 1 2 3 4, that touched 5, so you go to break even. So if your target is 6, at 5 I go to break even, so it's a break even. But then you've got here, that was a really nice winner again. So what's that? 6 or 7 winners, 1 break even, another winner here to break even, another winner. These are all your T20s on Easter Monday. Then you had another winner again. So the point I want to point out here is even quiet days you can do really well, and of course we kick butt absolutely later in the day. There was just some fantastic opportunities there. So the T20s, and most of you have heard me talk about the T20s and the T21s, which is the first pullback after a T20. I love them on the ES, I really do. Now remembering on the NQ 133, they kick butt, or they do really well on the NQ, but I like to wait for the first retracement. Okay, that's what I like to work for. And of course then you can see almost a 34B, 34B, 34B again. Back here we had a 34B, and we had another one just there, another 34B, all winners. You'll get these sweet spots. The most challenging part, traders, for us all, and even myself, is where you go in the periods of consolidation. So what are some of the signals and some of the things we want to really watch? When you see, pardon me, the 34, the 8, and we can see the 89 all coming together. Okay, so when we see them all colliding, this can be a mass area of confusion for the market. So if you were to say to me, what is my biggest challenge as a trader, it is handling these areas where you start to see all of these come together. Now I don't want to go into it today, but this is where you can then, as a qualifier, wait for your fractal breakouts. Okay, so as Bill Williams talks a lot about waiting for these fractals, but once again, there's so many things there you can add, but then you can start what we call curve fitting. You know, you can only apply so many rules to a setup. So my rule is, if I have 2 stop outs, I will sit aside and I'll wait for a new breakout. So here for an example, and I wasn't in on this, and you just got to be really careful on this area, and you'll see this on some live trading I did today, which will probably be on video too. But when I start to see all of these MAs converging together, you want to get ready to exit a trade or pull your stops in very quickly. But once again, I love the T20s, T20, and I love these as a stand-alone trade. Now, by the way, one of the things that comes up, and look, I'd probably get 1 or 2 emails a week on this. Why don't you take them all? Well, traders, the market's open nearly 24 hours a day. I have a target of on average $200 to $500 a day per contract, And the reason I say 500, I'll go above 400, which is my ideal target, but I'll go above that because you will have days that are down. Likewise, and let me just say this, if your target's going to be $200 a day, go for 300 to allow for your down days so you can net it out at 200. Now let me pull across another chart. There's something I just want to show you for a new student that is using a software program where he's limited on the number of indicators. Just one moment, I'll just put a hold. Okay, and just while I think of it, thanks to Chuck Wines, thank you very much, Chuck. He has coded a lot of our indicators for MT4. So for members only, okay, for full paying members, if you'd like to drop me an email, if you are trading with MT4, I can forward you a set of the MT4 indicators for most of my setups. So traders, if you are and that's very important, I should mention, if you're looking at joining me with MT4 now, we've got most of the indicators done now for Think or Swim, of course TradeStation, NinjaTrader 7. I'll provide within the 197, I give you a set of my indicators, so just incredible value where others will charge you well over $1,000. So this is the question from a new student who is using a trading platform where he was having issues with the short and long-term stochastics, which is my stochastics right here in the middle. You can see here, just put my pointer on here. Now traders, what you can use, and it works really well, is the RSI or the percentage R, the Williams percentage R. So if you've got problems, or if you don't have the or you can't overlay your long-term or your short-term Stokes for your slingshots, etc., or the T2s or even the T10s, play around with the RSI. Now this is a 3-period RSI, which is of course the standard setting for the RSI is 14. Some will drop it down to 10. It's ultra sensitive here, as we can see here, and this is perhaps not a really good spot to show you this, or maybe we just jump here. Okay, to use your RSI instead of the short-term Stoke, or even the percentage R. Now the percentage R, the standard settings for the percentage R are 12 or 14. In this particular settings, I've got it set at 8 if I remember correctly. Play around with the settings, but what you'll discover is either the RSI or the percentage R will be able for you to get fairly close to replicating a lot of what we do with the short-term stochastic, which we use for the slingshots and for the money on the floor trades. So RSI 3 or a percentage R of 10 or under can work really well. Now most of you are aware, when you plot a lot of these indicators, they're a lot thinner, and what you can do is format them. Most charting packages will allow you to this, to thicken them up if you wish, so that you can have the lines thicker, etc. Now with all of that being said, by learning price action trading and using your MAs on the chart alone, you can learn not to even require these indicators. For an example, with your T25s, really the T25 is a pure price action trade, 2 to 5 candle pullbacks, and I won't go into this public video. For members, you know how we trade the 8, the pullbacks over the 8. That's all you really need. So yes, for new students we talk a lot about using these, but if you look at some of the more advanced videos, you can virtually do away with all of these indicators and just really rely on your MAs on your chart. So something to really consider. So have a look at some of the later member videos where we discuss this in a lot more detail. Now we're up to 25 minutes, so members and for the general public, what I'm going to do now is go and I'll put this one up and we'll start session 2. So if you're short of time, of course go to my website. $197 is a quick recap. You get all of the training materials over 20 hours, the manuals, the PDFs, and of course now indicators for most trading platforms. Thank you traders. See you on the next video.